This is Teddy Keckstaff from Forex Trading Unlocked, and we are here today on Monday, August 23rd, with a weekly Forex trading and cryptocurrency trading analysis for you. Just showing you our disclaimer to remind you that this is for educational and illustrative purposes only. If you haven't done so already, please subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked, and also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com, written by myself, Teddy Keckstaff. It is available in paperback and Kindle versions. All right, with that, after that plug, we're done with that. Now we can get on with what you're here for. All right, we have the Forex-Trading-Unlocked.com website pulled up. We're going to skip down. We're going to skip past the calendar too. Numbers are out for today. We do have some good numbers coming out this week. The key thing you have to remember is the unemployment claims, to watch out for that on Thursday, and the oil numbers on Wednesday. Dollar index had a nice little spike high here on Friday, and today it is under pressure. Let's take a look at what's going on. So we have the Euro US dollar right now, which is coming off of its lows from Friday, and it is trying to stretch its gains. However, don't get caught on this one here. Remember that the trend is your friend. We've been making higher or lower move lows and lower move highs. We are just coming off a lower move low from just a couple sessions ago, or from one session ago. So this is key. You got to be very mindful of what is going on here. Just because we have a little pop against the dollar, don't all of a sudden get all bearish to USD. Now the trend has been going at a fairly decent slope here. I mean, if you really want to go down here, you have this, and we can even change from here to here. So we have some pretty decent downward sloping resistance lines that keep this trend steadily intact, trending lower. We could very easily see a nice upside correction, but don't get caught on it. It may be a trap. So we are coming off of a weekend. We had a profit-taking rally on Friday. I mean, you have to look at it that way, that right now, if you're coming off of lower move lows, odds are, until we have a true legitimate sign of strength, this is just profit-taking, meaning that people are just taking off their shorts and taking a little cash back into their account. I would be very leery of people trying to catch a falling knife down here. However, you have a low-risk buy play here. If you risk the low from Friday right now, you got a little bit, it's a little bit more than $0.50 risk. As far as how high can we go, well, if we just look at the last swing high down to the swing low, we're pretty much coming into that area of resistance and support. So right below those highs there, let's get rid of this Fibonacci thing, make things a little clearer for you. Okay, and don't forget to ask questions while we're doing this webinar here. We love to answer them here on Twitch or on YouTube, whichever you are viewing us on. All right, so let's see what we got going on here. All right, so we have the little resistance band that is now our target area, and we'll highlight this with a little ellipse. So right into here. Now, this falls just below and just above this last swing high. Could we take out this swing high? Well, yeah, of course we could. And if we do, does that make us bullish? Not necessarily. That would just be a higher move high after a lower move low, which would confirm a neutral intention more than a bullish intention. So expect to see a little spiking area around here. We have our trend line. Can even come down like this, and this is a much steeper downward sloping resistance line, keeping this trend intact. Obviously our target comes right into here. Let's see what happens. But even if we breach this first resistance line, it doesn't mean that much. It's very likely that we will probably come up into this area. What would really give us a turnaround in direction and even analysis would be if we take out $1.1910. This is the area we have to get above to really confirm any real show of strength. Otherwise, this target area here is most likely where you're going to see a bullish correction, because that's right now what we're looking at. The trend is your friend. It isn't a bear trend, has been for 2.5 months. So are we trying to pick a bottom? No, we're not, because that is the wrong thing to do, right? Any of you that have been following us and know me, especially know that that is not how we do things. The trend is your friend. You do not try and pick a bottom or a top. Okay, so by the way, while you're listening to our video, don't forget to share and like our video that we're streaming right now, if you don't mind, to your friends and out onto the internet. Let them know what's going on with Forex Trading Unlocked. All right, now let's see what we got going on here. We have this example for the number 1 weight in the Dixie. Now let's go to the British pound US dollar. Now, interestingly enough, this would be our big crossing point to confirm any real solid bullishness. This trend here is also rather modest in its decline. It's at a decent slope. We are coming off a higher move low. This is what's kind of key about this one. So the euro, which is coming off of a lower move low. Oops. All right. The pound, as you can see, is coming off a higher move low. So now this market has been in a big neutral, you can see, for the past 5-6 months. Overall, this trend had been going higher all the way up until March of this year. We tried to show more strength again here. Back at the beginning of June, we spiked, as you can see, and we've been trending lower since. So the question is, were we in a correction? Originally, that was what we were viewing it as. After continuing to make these lows here and then making this higher move high after a lower move low, this puts us in neutral. Now that we've set this base here, this starts to give us a reason to be neutral to bullish, at least in the more intermediate run. Short run, hourly, it's starting to look bullish, but that's on the hourly. Remember, hourly chart, this just came around here. You got a little head and shoulders. Boom, just for today, this could be just profit taking. Don't get caught up on this too much. Now, we do have a high probable Japanese candlestick buy signal forming here. This, today, if we were to settle where we are right now or remotely like this, this would be a bullish engulfing line buy signal. So, what would that mean? Does that mean that we're totally bullish? Not necessarily. But what it would mean is would give us some target objectives here. So let's go up to our good old 50% line. It helps us with Gann and Fibonacci, and then we'll put our 0.618 also in here from Fibonacci. All right, let's make this a little clearer. Okay, so let's say that this buy signal is solid. It is a high probable Japanese candlestick patterns. Remember, if you read the book written by myself with that title, you can learn how to trade it. So anyhow, we do have a nice correction back here. We have set a higher move low after a higher move high. So what does that mean? Well, does it mean we have the beginning of an uptrend? It could. It very well could. Or it could be wedging. Because if you look at this, we set this low. Now our target range is right into where this downward sloping resistance happens. This would be a good spot for us to see follow through over the next couple sessions for the pound US dollar. And the pound as a whole is very strong versus many other currency crosses. I think that's why, while the dollar has been gaining strength over the past couple months with the many other currencies, especially like the Australian dollar, and the New Zealand dollar, I would say, and also even the Canadian dollar. These currencies have not held up so well. The pound has not gotten beaten up as much, meaning that the dollar is a bull and the pound is a bear. So right now we are more neutral. We're not saying that the pound is really a long-term bull versus the dollar, but I think the dollar is going to have a really tough time hammering down the pound. So it doesn't mean you're not going to have your swings, but I would say that you're probably more neutral to higher with the pound US dollar in the longer run. Right now, if this correction is just a correction, the long-term trend is going to remain a bull, we're looking at our last best buy here before we continue to challenge resistance. And the key part is this first target area of 137.92 up to 138.35. If we breach this and take out this downward sloping resistance line, then we're looking for a shot all the way up to challenge this 139.90 where this swing high was. A breach of this area definitely has us in the upper end of the neutral trade that this market has been in for the last 6 months. It would have us buffering up against here. Obviously, if we can continue to make higher move highs and higher move swing lows, the pound US dollar on a monthly basis may actually have a breakout to the upside. It's hard on this one to have a really long-term perspective as being overly bullish. I think that buying dips is not a bad idea. Like this is a good buy signal here. So we'll see how this manifests, but use caution. It's very likely that we're going to come into a lot of resistance in this area. We could fail, and we could go sideways and chop around for the next couple weeks. We have a lot of, remember, we have a U.S. holiday coming up in 2 weeks. We have this trading week, and then next trading week, and then we have a holiday week. Also, we will have we're coming into the last month of the third quarter. We are getting close to that fourth quarter beginning in October. We're looking for some wild swings in the equity markets, especially, and not to mention the interest rate markets. And with those two, if they do start to really kick up their heels, it will be unlikely that the U.S. dollar and the currency markets will be flatlining and not doing anything. Odds are we're going to see a lot of action this fall as we move from the third quarter into the fourth quarter and wind out 2022. Lockdowns in Australia and New Zealand. This is no joke, folks. We're either having deja vu or whatever. It doesn't matter what will occur. Volatility is sure to kick up its heels, like I said, as we head into these future weeks coming up ahead of us. All right, so you have our upside target. A failure here from the low of Friday is necessary to confirm bearishness. Now remember, we're coming off these lows. Overall, we've been trending lower for the past 2 months. We've been trending lower for the last few weeks. It's only today that we're seeing this accelerated rally. Markets tend to go out like they come in. We did have a big sell-off last week. This could be just profit taking, run out of gas in this area, and then we hit support again. Now that would be very bearish. If we take out this higher move low, then we're laying right on the lows of here that we finally corrected off of back in July. Very bearish there. That would show a lot of strength in the US dollar. What would precipitate this type of move would be most likely if you see a big turn on support for the Euro US dollar. If the US dollar Swiss catches a big rally, as well as seeing that the US dollar would be rallying versus most of the other currencies in the dollar index. So just because Dixie starts rallying a little bit, I wouldn't count on it for follow through. But if you see the Dixie really move, then that means that you're having the situation going on with the euro and these other currencies. It will become very restrictive with the pound. So just to be mindful of that, you should really pay attention over the next couple of weeks. We have a little sell-off and choppiness in the US dollar Swiss. See, this is where we have our mixed bag of goods. The euro is coming off a new move lows, and the pound is coming off of a higher move low and a higher move high. Very neutral. Now the Swiss, as you can see, has been putting up a fight with the dollar the last couple months. It's been very choppy, obviously rather strong during the month of August, looking like it wants to fall apart over the past couple days. However, I would be mindful of this. This is the higher move low that we set at the beginning of August. We just came off a lower move high. That is neutral right now. In the short run, if you look at the overall trend, we had this correction that started back in April. We came down into June. We bottomed. Then we made this higher move, a lower move high, higher move low. So these are the numbers you got to watch. Which one are we going to break out? Are we going to take out this upside at 92.77, or are we going to fail from 90.17? A failure from 90.17 really has us looking for lower move lows and a continuation of bearishness, meaning a weak dollar versus the Swiss. A weak dollar versus the Swiss doesn't mean that the dollar is going to be weak overall everywhere else. We do have flight to quality going on in the world right now. Now remember, when it comes to flight to quality, where do people go? They go to the US dollar first, then they go to the Swiss for the euro environment, they go to the Japanese yen for the Asian environment. Now, if the dollar is strong versus most of these other currencies and countries, you're going to see still some volatility with the Swiss, the yen, and certain other major currency crosses where they will go in the opposite direction and churn around. So right now there is an overall bullishness for the dollar, and I think you're seeing more profit taking going on with these moves. This is very important to look at it, and not just the technical and political aspect and fundamental aspect, but be mindful of these relationships. So where the dollar is a bull in one place, it's not necessarily a bull in the other when you look at those regions, if you will. So we have divergence. We've been talking about this for months. This is still in play, and this divergence gives us a little bit of trickiness. So we have a little bit of indecision, as you can see, going on with our major currency crosses, but we do have some direction. The key is we have to watch how we swing over the next week or so and set newer move highs or newer move lows, which will help us to really give us foresight as to where we're trending into September and into the end of the third quarter. With oil not being so strong right now, and it's come off its highs, it's holding up. If we do see a big rally to the upside in oil, and as well as an increasing measures in lockdowns, now is it going to happen? I hope not, but when we look at Australia's in lockdown, New Zealand went into lockdown last week, and we have the U.S. I'm in the Chicagoland area. We started with Chicago going mask rule. Now we're in the full county of Cook County, which is the biggest county in the United States, going to full mask rule, and this is all in a period of a week. Odds are by Labor Day we're going to start to have more restrictions on gatherings and numbers. Concert venues are starting to close or cancel their shows and reschedule for a year from now. And these are bands and events that have been rescheduled already from last year, and they haven't been around for 2 years. So with that already leaking into the markets, are we going to have a full-blown deja vu repeat of what happened before? I certainly hope not, but I would be mindful of the fact that the currencies will react severely to these lockdowns. And now, since we've gone through this before, they're going to react even quicker than they did before. So expect some big trends to emerge in the next couple of weeks. So whether you're a bull or a bear on whatever currency cross it is out there, be mindful that big trends are most likely going to be set in motion as we head into the third and fourth quarter of 2022. So we have this upward sloping support line keeping this trend intact, and then we're going to have this downward sloping resistance line keeping this trend intact. So we're wedging. The question is, a breakout above 92.77 obviously is very bullish for this market. You can see that this here, if you take this resistance line, the market's been trying to breach this little area. It did, but it's hovering still right around this. So there's a lot of indecision and balancing where this trade is getting neutral in this area, but it's a grappling teeter-totter for bulls and bears. Which way are we going to go? I don't know. We're going to see very soon. Right now, short run, obviously, we're hitting support today. I think this is a profit-taking move. I could see us reversing gears very easily tomorrow, and as we start to get the full trading week online. Remember, we're coming off a Sunday evening's trade into the beginning of the week. The Asian markets are closed, European markets are closed, and now we're going to see how the U.S. markets react to start this week off. See how positive or negative things are going to be. Remember that the big numbers are coming out Wednesday with the oil numbers, Thursday with unemployment claims. There are other numbers that will be impactful, but those are the ones that we don't need to worry about too much. All right, so key off of this area here below 90.17, we have a bearish outlook, and obviously above 92.77 when the bulls come back. In between there, I would be very cautious. We did have this lower move high, but then we made a higher move low, lower move high. As you can see, we're wedging. Wait for confirmation of a signal. So we have indecision here in these European markets. US dollar JPY, talk about a market that's swinging around. As you can see in the past 4 days, it really hasn't gone really anywhere. The highs are very close to each other. The lows are very close to each other. More indecision happening here. But the overall trend for this bad boy is higher. It's just been a creeping grind higher over the past 6 months. That may remain to be the case also as we move forward into the rest of the year. We are, however, looking for a breakout to the upside. Overall, this market is a bull. We have a long-term target for the US dollar yen of 112.5 minimal upside target, and then with a longer-term end-of-year target of 114.5 up to as high as 116 even in the US dollar yen. This is our our outlook, especially if we have a continuation of lockdown measures globally and if they start to increase in your major market and economies around the world. So as far as a trade here, what do we have? Well, if we come off of this recent low, we did have this short-term buy signal right here, and we are bullish. Besides longer term, in the short run, we are looking for a breakout to the upside. We are looking for a challenge of this 110.84 area, last swing high. Trading above here would most likely facilitate more buying pressure. We expect a lot of weak shorts that are trying to call a top, if you will, to end up being scrambling out of their shorts in that area, and that will probably help fuel a nice move up towards that 111.5, 112 area. Only a failure from 109 here. So here's your upside breakout point, and we are bullish with this buy signal that was triggered last week right here. Okay, this is a piercing line. Again, if you read the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. You can check out that book as well. Okay, now let's see. We have... Let's move this over here, and let's get this arrow here for clarity. So once again, be cautious with this one. You can see that we've had a range. It is positive on the day, even though it's just off of its lows. It's just above the close from Friday. You can see that it opened up on its lows and has been trying to rally all day long. That is a sign of more strength than weakness, folks. That's just what you've got to be paying attention to. And we'll see how things manifest over the course of the next trading session or two. Right now, like I said, we are bullish. Now, as far as the rest of this trading zone, that's a whole nother story here. The Australian dollar, US dollar, is in a free-falling bear market. We do have a bullish engulfing line signal, buy signal coming up here. Does that mean that we're calling for a bottom in this market? Absolutely not. This is where we're getting back to, we think the dollar is just under profit-taking sell-off right now. Australian dollar here, as you can see, today's bar is a bullish engulfing line trading signal. If we were to settle where it's at right now, or even remotely around where it's at, that would confirm a short-term buy signal. We would be looking at this. This is a counter trend trade. Do we think it's going to hit the full potential for this? Anything's possible, but we don't think that there's much in here. If anything, we see it going more towards this 50% to 0.618 area. Okay, so check that out. You see that 0.7265 to 0.7301 area. Excuse me for that little interruption, folks. Just wanted to grab my drink. I've been talking all morning. My throat is a little dry. All right, so this is about the extent of a correction that we're looking for, if we even get that high. Australian dollar is a dog and a bear in almost every cross out there. The fact that you are skimming new move lows and getting a little bit of a bounce today tells you a lot. People have been short this market for a while in multiple crosses, and they're probably nibbling out. It's always a good start right now as you're into the new lows to take a little profits. I would expect a lot of the profit-taking people to start selling in this area here, and then only if we were to pierce this last swing high would I even remotely put us on a short-term neutral to bearish campaign. This is right now a recoil. It's a counter trend trade. It may not even last more than today. This is the most serious one of all. One thing you can count on is there's fundamentals and technicals that drive the markets and trends. The fact that we have these severe lockdowns in Australia with no sign of them remotely letting up for at least a month to 2 months, with the way the restrictions are already being set for dates and stuff, and as far as how hard it is for people to move around, business is completely restricted, their economy is collapsing due to the lockdowns. This is not good. It doesn't bode well for the Australian dollar currency. With that being said, any uptick, like I said, right, is meant to be a profit-taking move. It is just a calm before the next wave lower. What would take us off this outlook as far as for Australia would be, the only thing that could give us a sign of strength would be if China starts to up its demand for Australian commodities, which they pretty much put a stranglehold and shut them down. So that doesn't seem to be ending anytime soon. That's another big problem for Australia. The lockdowns, like I said, are already in place. They're not going to be lifting any of these restrictions for at least 1 to 2 months. So when are we going to see a bounce in the Australian dollar? Probably not until October-ish. And that would be another big question mark as far as how far of a bounce we get. You can see this market has been trending lower for months. It was a big bull versus the US dollar. The reason it is trading the way it is now is because of fundamentals. So technicals are off the table. Right now you got every overbought, oversold indicator saying oversold, oversold. It's been saying that for months. You got a buy signal here. I would not use that. Usually you have those correlations of signals combining to give you a good potential trade. I'm not saying that, I mean, this is an active buy signal forming right here. Does that mean that it's going to be a good one? Well, it could. It's very easy that it could pop up to this area, like I said, hit this target, and then fall back on support. So, but there's not much that you're looking for as far as a move. You're not looking for to buy this area here now where you're trading at and look for something to hit 75, 76, 77. There is no long-term trade here whatsoever. So the trend, that's where you have to be mindful when you put on these trades. You're more likely to do well looking for a trade to sell and trade with the trend here than you are to do a counter trend trade. Taking action on this type of trade is trying to catch a falling knife. 9 times out of 10 you're going to end up getting buried on that. This is a very valid signal. It is one that I'm highlight in my book, High Probable Japanese Candlestick Patterns. However, whereas I am always telling my followers and students not to be subjective, to stick to a plan. The one part of our plan is there is no subjectivity what to do with this buy signal when it finishes out today. So on the close, there is a true signal and a true buy signal with the target. Risk level, which would be this low. I can give you that information right now. The low from Friday is the risk level. Anything below here, this trade is off. The trend is definitely a bear, so you don't want to be long below there. So the risk is not that much, but as far as how far you have to fall before you know you got to be out of the market. The reward, however, is minimal. So this isn't right here. You would not take this trade. The risk is higher than the reward. We do not take trades where the risk is higher than the reward. We want the potential reward to be minimal of 2 times our risk. Usually I like my best trades to be lined up where it's 3 to 5 times the reward to risk level, just because those are the good trades. Those are the trades you want, and those are the ones that balance out your losers. Taking trades like this in this situation would be a loser, so you would not be taking this trade. Okay, so not just because it's a counter trend trade, but because of other variables, you would not be taking this trade today. But it is a valid buy signal forming. Odds are, if this afternoon when the market closes, it's going to be around where it's at, and then But here's another thing: is don't try and jump in front of this and buy it right now either. I mean, you do whatever you want to do. I'm not going to tell you what to do, but you could really easily see this market erode. Like it's on its highs right now. Before the markets close, we could see new lows on the day in the Australian dollar, US dollar. So that's the kind of environment that you're looking for. Could that happen on any given trading session? Of course it could. Is it likely to happen here? More so than others, that's for sure. All right, so you've got our little skimmy on that. New Zealand dollar, US dollar is also putting up the same similar situation. The only thing the New Zealand dollar has going for it is the fact that they are on a raising interest rate policy. So that will slow the decline of the New Zealand dollar versus the US dollar. Lockdowns in New Zealand does not help the New Zealand dollar. So that's why we're coming off of these lows. It's a counter trend trade. This is one I think you do have a little bit more room to the upside on. This would be possible if this is what you want to do, if you want to go against the trend and do a counter trend trade. We have this area as well. Now this is similar to the Australian dollar, US dollar trade. This one has a little bit more room to the upside, but even this one doesn't have much reward to risk ratio in it as well. This would be less than 1 to 1. It would be right around 1 to 1. Not a good trade. So a failure from the low from Friday has us on the big bear campaign once again. If anything, I would look more to sell into strength up in the 69.45 to 69.79 area than to buy into strength weakness right now. Overall, the trend is your friend. We're coming off of lower move lows after a lower move high. Stay on that path. The trend will always help guide you the best. US dollar Canada having a really interesting week last week, breaking out to the upside in a big way on Thursday and Friday, capping out, like, I mean, talk about a bounce. Like, we just, boom, swung up high in the month of August in just a few weeks, rallied up big, pierced this line here. Now, this has been an overall bear trend for 14 months. The past 2 months, we've been in a very solid uptrend, but this solid uptrend could be running out of gas. If you really look at it, we're not far away from setting off lows. So US dollar strength, even if it's in the other markets with Canada, between the political and fundamental issues that are happening, technically, this market has a good chance at selling off in a big, big way. Now, we do have a sell pattern forming from the trading from Thursday into Friday and into today, especially if we settle where we're at right now. This would be a higher move high that we're coming off of. This is a counter trend trade. I would be very mindful of what these levels are. Obviously, if we take out the high from Friday, well, the bulls are in full swing. We are coming off a higher move low. So this low here is very significant right here. We could be set up for a wide range trade. Now, this upward sloping support line is basically a 45. It's a pretty decent slope. Should we take this out? Well, then we know that we are off the rally campaign into a neutral outlook with a good chance at a test of support at $1.2423. This is our line in the sand, folks. I think that if we fail from here, we will set a very, very strong trend lower that will have us flirting with the lows that we set back in July within a few weeks. Does that mean it's going to happen? Not necessarily. Oil has come off its highs. That trade is kind of killed on it right now. It's not really in play. Obviously, a stronger oil market would definitely put pressure on the US dollar Canada. And then we have the issues of, we have elections in Canada. We have the White House administration not getting along with the Canadian administration. That's not a good thing. So our borders, we have some issues with that, transportation issues. These are all things that fundamentally and economically will start to continue to cause this indecision and set us into a range trade kind of area. Now, as far as dollar strength globally versus currencies, or weakness versus currencies, I don't think that that's going to be that indicative. This is where the divergence comes in. We know the long-term trend for US dollar Canada is down. We've been in an upside correction since the beginning of June into the end of August here. We could just be spiking as we did there on Friday and calling it quits with this correction for the summer, and now start our next leg to lower. Even if we don't go to the lows that we set in June, for us to correct and test this $1.2423 area is very, very likely as we settle into a period of indecision in the fall. Once again, if the lockdowns continue, and especially if we have lockdowns that continue here in the United States, it would be surprising to me if we see US dollar Canadian bulls taking over the long-term trade here versus the long-term bears taking control, which I think they will reinstate the longer-term trend on the weekly and the monthly and have this market testing the lows from June sometime towards the end of September, beginning of October. And especially if we see a big sell-off in equity markets in the United States, which would definitely keep the interest rates higher, or interest rate pricing higher, meaning interest rates lower in the U.S., giving a lot of weakness to the US dollar, especially versus the Canadian dollar. All right, so we have done our walk around the FX currencies. Now let's get to the BTCUSD. Let's see what's going on in the cryptocurrency arena here. Bitcoin probing higher move highs once again today, but the ranges are tight. So don't try and fight this ranging bull. It's a good place to take profits. I would be very careful about trying to short Bitcoin right here. But anything is possible. You know, I'm sure margins are very, very high, and it's not easy. It's not an easy trade to follow and watch. But as you can see, we've been grinding higher since the middle of July. Made our swing high, swing low, swing high, swing low. Trend is your friend. It is getting somewhat steep. It's not quite a 45. It's definitely a little bit steeper than that. But it is pretty solid. So by attrition, we'll be coming up on this anyhow, and it's very possible we could go sideways for the next couple weeks as we head into Labor Day. A lot of indecision going on in this world. Crypto seems to be getting its big lift once again, but this is also, in the longer run, it could be coming off a low, setting a lower move high, you know, so we don't know. We have to get back above the 60,000, 64,000. That will be our key, obviously, if we get to the high point, which is there and here. And what we could do, and we should do, is do this. Let's look at the high there. Let's look at the low there. All right, now we have for Bitcoin our 50% level and our 0.618 level. And let's see what Fibby has to do here. Look at that, folks. So from our high down to our most recent major low, we have us coming right into our target upside target zone right there. We're in it, folks. We're in it. The big question mark is what's going to happen. All right, well, pretty simple here. I'm going to draw a little line here. If we fail from this last swing low, expect the market to be on neutral to lower trending swings. And if we breach this 51,000 marker, well, we're going to be targeting this upward 59,000 area and looking for new move highs in Bitcoin and the crypto markets. Remember, Bitcoin is kind of like the dollar index now. Even though it is its own market, it is a reflection more of the industry. So we're looking for this to continue to be a little bit bullish here right now, probing at resistance and then giving us a reason to sell it. So right now we don't have a sell signal. We do not have a true reason to think that this is going to just keep on running away to the upside. If anything, it would be very likely to at least have a correction and test support here at 44,000. I could see it getting down to 40,000 before we get a bounce and then start to run back towards its highs. 37,325 area, this would be the extreme for any sell-off. Only if we fall below here would I be worried about Bitcoin in the longer, intermediate and longer term pricing situation, where we could see it drift once again from this 40,000, 50,000 area back down to the 30,000 area. Maybe that's what we're starting to do, is set up a big range trade between $30,000 and $50,000. So let's take a look at some of our other cryptocurrencies here. We don't have any questions on the chat here on YouTube or on Twitch. Oh, here we do. It's messaging retraced. Okay. All right. So, all right, Sri, if you want to give us a message or a question, go right ahead. What would you like covered? So yeah, before we end this stream and then go back to we have another stream coming after this with the trading signal. If you have any questions here, I'm putting this out on YouTube. Yeah, I might as well do it here on Twitch. So yeah, you guys got any questions, feel free to ask them on the chat room, or you can leave comments in the comment section. We'll answer them later on for you. Maybe include them in our next analysis video. All right, so we have the Bitcoin US dollar, which we see is pushing on its highs. Looks like it's starting to run out of gas. You can see the range over to, well, think about this, Saturday and Sunday, very, very tight. Usually Bitcoin has a lot of action on the weekends because you have people that are off and they have more time to, you know, focus on Bitcoin instead of other things that are only, it's the only market in town that's open 365 days a year and on all weekend long, you know. So except for betting, that's not a market. So, or well, it is a type of market, but not a financial market. So anyhow, back to our topic at hand. Bitcoin, we remain bullish. I think you are in a good profit-taking area. I would suggest if you are long this and you'd like to scalp this in some capacity, taking some profits here and waiting for a dip to buy is better than trying to sell this in one of the other means that you can do so. ETHUSD, this is a very interesting, oops, there we go, ETHUSD. All right, actually I can go right to here. So Ethereum, US dollar, we have a sell signal here that was triggered a week and a half ago. As you can see, we have buffered a little bit above our sell level and we are still running into resistance. Irony of it all is you can see that where Ethereum did poke a higher move high today, just like Bitcoin did, it's been running out of gas. It's been buffering against resistance and it seems like it's capping out. If you go to some of my past videos, when it comes to even where we just focused on cryptocurrencies, when it comes to valuation, oh, here we go. We got some questions. All right, guys, I will get to that in just a minute. When it comes to value in cryptocurrencies, you got to look at the underlying technology. Like Dogecoin versus Bitcoin and Ethereum, there's a wide gap as far as technology and as far as whether it's going to be embraced and useful in the future. That's where things like Doge are more of a meme stock, just run up, more of a pet rock kind of pump and dump thing. Whereas when you look at Ethereum and Bitcoin, even Monero, which we're going to cover, these all have technologies that are being embraced by the financial system, by the world, and for transactions where it looks like there's a technological future. Let's see, how do you write that support the higher one questions? Do you most often focus on the 50 and 60? You know, okay, good question here. So we have a question as far as do I focus on the 50 and the 0.618? That is where I find my initial target zones when I am breaking down markets. I do have other fine-tuning ways of getting my targets, like especially if you read my book, High Probable Japanese Candlestick Patterns, depending on the pattern and how it is set, will dictate the target level and how you manage it. The risk is pretty easily defined with all those, and if you read the book, you'll be like, well, wow, it's all pretty simple, whether you're a bull or a bear, where your risk is, and finding that. As far as managing your target levels, do I use 50 and 0.618? Sometimes. I use it mostly in our videos because most people are very familiar with those numbers, even the beginning levels, and they're very common and they also work very well. 50% is a Gann level and a Fibonacci level and a multiple other ones. It goes back to the floor trading days and even from 100 years ago, where 50% just typically seems to be a gravitation target point. It's not always where stops are or where orders are. It's just a directional key level. 0.618 typically is an extreme where if you get above that, you know your odds are that trend, whether it's bullish or bearish, will continue. Usually if you are in a corrective move, that is pretty much around the extreme of where you will see the market reach, whether it's a bull or a bear, before it has a turning point. Okay, so that's why I do use them. I do use them a lot. I'm a very big fan. It makes doing webinars really easy too for giving scale for these, especially because we're usually talking about the daily and not on an intraday basis for you. So yes, what is your snot-nosed stirable? Yeah, good question. Link to the book, please, is available in hard copy. Yes, it is. Hard copy? No, it's in paperback, but I'll give you a link to it right now, actually. So if you go to on the website forex-trading-unlock.com, we have a whole page that's dedicated to this, and then you can go to Amazon from there. So here is the link for my book, High Probable Japanese Candlestick Patterns. This is for our one viewer here with the question. You can check it out if you go, and I'll show you how it looks like too. When you go to the navigation bar for our website here, products, courses, and services, you go to this drop-down menu here where it says High Probable Japanese Candlestick Patterns, and that will take you to a page. And I might as well just show it to you. I don't have any charts on this. So I will take you to the High Probable Japanese Candlestick page on our website. And from here, you can obviously see our streaming that we're doing like right now. There's a video that highlights the book. And then you also have this. This is what the cover looks like, and this will lead you to Amazon. You can preview it on our website, a little bit of the first chapter. You can share it on social media. We would really appreciate it if you would do that to your friends in the trading community. Or you can buy it, and when you click on this, it takes you right to the Amazon page right here where you can get the Kindle or the paperback. Because Amazon is our publisher, we don't do hardcover. But we do have paperback, which is good. All right, cool, great. I'm glad you got that. Thank you very much for your interest, and let us know if you like it. In fact, we're going to reach out to you right now, and we'll add you as a friend here on Twitch. We appreciate your interest and what's going on here. So, all right, so back to our crypto analysis. So let's go to Ethereum US dollar once again. So here we had a sell signal that we were talking about. This is our downside target objective. We're looking for a corrective, a move down here. Now obviously we made a higher move high today, but we're still looking for this as our downside target objective for the sell signal. Just poking through resistance here for this situation does not take us off of the short-term bearish campaign. Now if you'll notice, by attrition we're wedging. This downward sloping resistance is just rising a bit, but the trend that's been intact, by attrition we're coming out of it, as you can see. So the question is, will we resume it and get back above it, or will we stay below it and start to fall off? Which that's right now where I'm looking for a short-term correction. Overall, we're bullish Bitcoin and the crypto sectors, but I think right now a good correction down to here would be a good spot. Get some profit taking, and then all of a sudden you'll have a reversal of fortune and get the bulls back in. So it'd be a good place to base, especially if you look at in the past here, we were chopping around here. There was a lot of resistance, then we broke out. Now it's becoming support. So it'll be key to see if we can stay above this 2886 area, and if not, if we come back down, notice this is where we found support and it was resistance. So if we base again in this area, and now we got to stretch it out to here. If we base in this area, this would be huge to set a higher move swing low, and then boom, set the longer term trend as we head into September, October, and November. Anything is better than the ebook. Yes, correct. First of all, I'm not a big fan of Kindles. I know they're convenient unless you're reading a Stephen King novel. Anything that's in the trading space, especially where you have charts and things like that, I'm not a fan of. I think I first of all prefer books anyhow, because you use your tactile senses and it's you get more out of it. I absorb more from a book than I do from reading off a screen. So, yeah, thanks again. I like that point. Anything is better than the ebook. So I'm not all alone in this digital world here. Really appreciate that. Thank you very much. It's always good to have good communication on chat and hear some good comments, and well, even the criticisms too. We take them too as well. All right. So let's see. We have how do you write that support? The higher one. I forgot where you're at on that one from DuxMe. If you're still out there, DuxMe, send us another little clarification on that question, and we'll get to it. All right. Okay, cool. So back to ETHUSD in the cryptocurrency space, you have our downside objective only above the stop level here at 37.38. That we get really, and then it's troublesome for me. I think that the technology has a value between 2,500 and 4,000 right now. As it pierces that 4,000 barrier, I think you're overpricing Ethereum for the technology and its use. Maybe it's at the top of its earnings there. Anything beyond that, I think you start to run into some trouble with a bubble type of situation where you start to have some really big sell-offs in Ethereum. Like right now, there's some big crypto gurus calling for 40,000 in Ethereum before the end of the year. That would be great for me. I am a holder of some Ethereum. I just recently took some off the table with the sell signal. I'm looking to buy back more around the 2,300 area. 40,000 in Ethereum would be, well, great. I'm long. I just don't believe that that's going to happen in the short run. Could it happen eventually? Yeah. Could it happen? Absolutely. Will it? If it does, it starts to give me question as to, like once again, as these technologies become more expensive, like they may be a store of value and perceived to be, but there's an underlying technology that is the true value that is really giving these things some sustainability. And as you overprice this technology, then the spreads get wider, and the cost of what their premise is to do is to make transactions easier, faster, and cheaper. And as you remove that cheaper factor, then something else will spring up. That's the whole market's correct. And if you are set out to do one thing, and now one of your key components and cores of what you're trying to do is no longer being maximized, well, then you have a problem. All right. XMR USD, look at this breakout to the upside. So while Ethereum is buffering its highs, Monero while Bitcoin and Ethereum were rallying the last couple weeks, boy, is it getting followed through the last couple days. And over the weekend, boom, it does it ever. Now, we are in a similar situation here. We're making higher move highs. We're trending higher. I would key off of this low from a week and a half ago. Anything below 243, we still find value from 150 to 200, basically, 225. Anywhere in this area, we find really good buying support for Monero and Monero US dollar as far as a longer term outlook. This is another technology we embrace as far as longer term. Unlike Dogecoin, Ethereum is coming off the Bitcoin network. Monero, as far as transaction costs and lowering them and making financial transactions faster and more readily acceptable. This is embraceable technology. Once again, this as far as a value, you can check our past webinars. We own this. We're bullish. We're looking for this to cap out around 400 to 450. Where it spiked high on its original high, could it go higher? Absolutely. This is another case of, and I can't, there's the technical aspect of these markets just like any market. And we have the social media, which helps to drive a lot of the interest in a lot of these crypto space and what have you. It's very unregulated. It's very wild westy, if you will. It's very unregulated, and there's a lot of scammers involved. So these pump and dump swings help to give more surges to the upside, and there's vacuums to the downside. So be mindful of that, and remember that where's the value? And if the technology gets too pricey, the value diminishes. So we think there's solid value in Monero all the way up to definitely 450. In the longer run, it's more embraceable and acceptable if it trends higher slowly. And as far as a store of value, we believe it's there because the technology is solid and has a very good long-term outlook. Do we see Monero going up to 40,000 like Ethereum's being predicted and Bitcoin's going to 1 million? Anything can happen once again, but I would be very leery about being caught in a bubble wave. And should you get a big severe run up like that, be mindful and take some profits along the way. Definitely get out of all your basic capital if you get a major blow off rally. And then just play with the house money, because that way if you have a retracement, you can always put some of your original capital back in and average in and get the scalp there. Or at least not get hit for what at least if the markets run all the way up and they collapse and you make nothing or you lose money, well, then that's letting a winner turn into a loser, letting a big winner turn. It's not good to let a winner turn into a loser. You always want to try and avoid that, but never let a big winner turn into a loser, because that's completely mismanagement, and that is on you, my friend. Be honest with yourself. All traders, you can come up with a reason why you want to buy and sell anything out there and why you maybe did or didn't do something in the marketplace, but always be honest with yourself. If you broke your plan or if you didn't have a plan, that is your fault. That is on you. The market doesn't care about you. Money doesn't care about you. The markets don't care about you. Whether you win or lose money, it's irrelevant. It doesn't change things whatsoever. So be mindful of that and always be honest with yourself when it comes to that. All right, since we talked about the Doji, let's go and look at it right now. Doji US dollar. So Dogecoin, as you can see, this one's not making new highs like Bitcoin and Ethereum. We had a nice run up. It's kind of funny. 30 cents seemed to be the magic number like 4 months ago, 5 months ago. Buy it at 30, sell it at 60 or wherever. Or if it goes above 30 up to 75 cents, $1, $10, once it gets to 30 cents, buy it again. There's the floor. Well, that's not true. We found the floor somewhere in the lower teens here back in July. That was a low of 16 cents. We're trading now almost twice as high. 100% appreciation in just a month, if you will. This is the one, though. However, we've seen some boosts, and you can see that it is really tight here the last few days. where's the value here? This is the sustainability factor that we are getting lost on. We can see social media, and my biggest thing is that when you have billboards around across America and advertisements trying to get people to throw money into any investment, which is illegal to do that. It's just always illegal when you start pumping those kinds of ads out, but you can do that for Dogecoin and for cryptocurrencies. And when you market and promote that way, that tells me that there's no underlying value in the technology. So I've heard that where people are Doge fans, they're like, yes, I embrace it and I will use this for the rest of my life. Well, it will be you and just you and your friends who are Dogecoin followers and are stuck on it. I think we have a lot of people that have invested a lot of capital in this market that are hoping and expecting this thing to go to above $1 or more and become Dogecoin billionaires. It could happen, could very easily happen, but I would be very careful of the spikiness of this market. Odds are you're going to see a run up. We may challenge these new highs, but I'm long this. We took a payment on some Dogecoin for some work that we did. We took a little out for cash right away, and then we're sitting on the rest of it, where we have it here in the right around 40 cents, upper 30 cents area. It's at 39 something, just below 40 cents. So my plan is that once it gets to there and hits above 40 cents, we're liquidating the majority of the position. I'll keep a couple Dogecoins where maybe I'm the idiot out there and only ends up with 1 or 2 Dogecoins when it's worth $1 million. But hey, who knows? If I have two Dogecoins and it's worth $1 million a couple of years from now, that's fine with me. If I miss out on the billions, it is what it is, because I just don't believe the technology is going to be able to be that sustainable unless somehow this thing gets adapted for the future, but that's a whole nother story, and that's for technical people. All right, let's see. Buying your book now. Thanks for delivery 23rd. Wow, thank you very much. You guys are awesome, and you especially buying the book. Leave a review when you're done with it too, and if you have any questions about the book or what have you, then you can reach out to me on LinkedIn. Check out my profile there and send me a message, and we can discuss some things. If you have any questions about the book, I'll give you a free shout out for buying the book and coming on the chat room here and being interactive. So just check me out, Theodore Keckstedt on LinkedIn. You can find me through our website on forex-trading-unlocked.com. We have the social media tabs here for LinkedIn. There's 2 profiles. One is for my business and one is for myself. So, and then you can reach out to me, and any of you followers out there, if you want to reach out to me through LinkedIn to build a relationship and get some questions about the industry. We deal with people at all levels, beginners to proprietary trading groups and institutions that provide technology for trading platforms, brokerage houses all around the world, and what have you. So, yeah, if you want to have access to that, like since you bought the book, have a couple questions, reach out to me, and I will oblige you for sure. Very happy to engage and interact with our following. So thank you very much. Appreciate that, man. Made my day. So, all right, so Dogecoin, as you can see, where's our upside? We are looking for it to press resistance right now. The trend is your trend, making higher move highs and higher move lows. But as I said, I think this is a bubble. It's looking to run out of gas, and I don't find any value in this technology here except for somewhere below 15 cents. I can't. It's not that I'm just trying to be down on the Doge. Like I said, I have to stick with my model for valuations of cryptocurrencies, and there's plenty of other ones out there. In fact, we have a list of a good 5, I think there's 5 for sure that we're going to highlight, and we're looking at another 5 for a total of 10 cryptocurrencies to start taking a look at. There's little different pieces of blockchain technology out there that are helping to give the technology, and there's different ways you can capitalize on these cryptocurrencies besides Bitcoin. And there are some are for a trading mechanism for as far as trying to, get on the next big cryptocurrency coin, and some actually they have for, like I said, there's a floor I think being built up in Ethereum and Bitcoin as far as the blockchain technology and usefulness and how it can generate income for and move transactions and data around the globe. And because of this new technology and way of doing things, as it is more and more embraced, which it is on a daily basis, there are some of these different altcoins that are looking to be, they're very nice. They're very cheap right now, and unlike something like Dogecoin, I mean, some of them are trading in the penny, not necessarily pennies, but in the teens, at like 15, 20 cents, upwards of $1 or $2. But like I said, their technology is something that is embraceable moving forward, and or merging with other technologies where they're floating off the Ethereum network and the Bitcoin network. And these are topics of discussion that we will bring into our next video. So we don't have any more questions, so we're going to go back to the Euro US dollar real quick and check out where things are. Okay, it's coming off of its highs just a tad right now. We can see that the markets are, yeah, the dollar still is under pressure, but be mindful once again of how that pressure is occurring. We see profit taking in the Euro US dollar. We see the profit taking in the British pound US dollar. But remember, when you look at the US dollar Swiss, here, this one is a profit taking move as well. It's coming off of these higher move highs. So remember, there is the divergence, not diversity, divergence between the different areas. So you have your European sector. We have divergence between the euro pound, and the US dollar Swiss as well, as far as how they are truly trending. And that's the big thing, is we want to be mindful of what is trending now. Stick with those trends, like the Australian dollar, US dollar. Remember, Australian dollar, US dollar, this thing is trending lower. This is looked at as just a little corrective piece. And it's something that's really helpful if you want to look at the currencies and batch them. Like, for instance, you go to our page here under Markets tab, Forex. You can go instantly to a page dedicated, like we're going to for these currencies, and also check out these other crosses. So here's a trade that we're going to end on here for you. British pound, Australian dollar. So we've been talking about how the Australian dollar is weak versus most currencies. British pound is actually strong versus most currencies. The pound's strong versus the dollar today, but so is the Australian dollar. So you can see how the pound Australian dollar is coming off of its highs from Friday, and it looks like it's negative. It wants to sell off really big. Well, that's very possible, but remember the Australian dollar component. This is another one where the market's overdone. It's kind of like how the US dollar was overdone going into Friday. So here we have the British pound spiking, and now it's looking like it's a US dollar trade. It's almost like the pound dollar in reverse, right? So, but it's the Australian. So this is where we can see trends that are probably going to maintain themselves. As you can see, this has been going up and up and up and up since the beginning of 2021. And with the lockdowns coming into play, and I would be mindful of this news out there as to what is going on. Okay. All right. There we go. All right. And then let's go to another. Oops. Sorry. Go backwards. Duh. All right. Here we go. So here we go to the Australian dollar. So remember, we looked at the Australian dollar and we looked at the pound Australian dollar. Let's look at the Australian dollar versus the yen, the big currency in its trading zone. Look at this. It's bouncing too. So it's been beaten up so much that it is bouncing off of its lows. The US dollar has been railing so much against the broad basic currencies. So today, we're looking at this, viewing all these moves right now as profit taking. Okay, if we have follow through going into tomorrow and Wednesday, well, that's a totally different story. But right now, we're looking at these as profit taking moves, and then be mindful of the fact that currencies like the Australian, they're negative versus most currencies, period. So this profit taking move, look for it to continue a little bit today into tomorrow, Wednesday, whatever. As soon as you see a reversal of fortune, jump on that. That is the trend that is in place. So negative Australia versus all crosses. Pound very strong versus most crosses. Mixed against the dollar, but still holding up firm. Euro very, very mixed. So your batch of currencies, when you look at the trading zones, is definitely we have that divergence. Divergence is the key word. It's been in play for a while. Be mindful of it. Keep paying attention to it. All right, so we've covered all these markets. You guys have been great today. Let's see, one last look here. Do we have any questions on Yahoo? We got a couple thumbs up like that. Thank you for the likes, guys. Hopefully you've been sharing it too. We got a good amount of watching on YouTube. Thank you guys for showing up. When we end this stream, it's been 1 hour. We are going to put up another new stream in just a few minutes. We have this Ethereum sell signal, and then we are working on a couple other trading signals as Monday's trading ends. We will have a couple new signals for you going off for the Forex markets and the crypto markets. We're going to figure out which one we're going to stream. So we will set that up for you. We're going to have a lot of good information coming out for the rest of the trading week coming out this afternoon. So we got to see how these end. We got to remember, we got to wait for the close, get confirmation. Just like we're showing you here, we have this bullish engulfing line forming right here on the Australian dollar, US dollar as we talk. But 3 hours from now, we could be making new lows, and this does not exist. So do not try and get in front of a trade, my friends. If there's anything you listen to me, never try and do that. That is one sure way to end up throwing away a lot of money. I've seen many people say, hey, there's a bearish or bullish engulfing line forming or a 3 inside up or whatever pattern forming today. I'm going to get in front of this so I can get a better buy or a better sell than I would after the close today. Key problem here, that after the close confirms the signal. That's when you take a trade. There's a reason why you take the trade after the close, because after the close today, if you're jumping in front of it, it may not do it. The market could reverse gears, and then you're into a losing position that you took not because you were following your trading plan, but because you were trying to get in front of a trade, not knowing whether you had confirmation of a signal. Two very big mistakes. Don't do that. I've seen people do it from the trading floor to off the floor, all across the board, all levels of traders. If you do it, odds are you're going to end up throwing away money as you do. It's just like in many things. Think about it as a poker player. When you're a poker player, you got to sit there and be patient for your moments. You can't just get whittled down, constantly throwing away little losers, because then when you make money, just like in trading, it doesn't absorb your losers. So don't throw any extra losers into the mix. One thing you can do, you can't avoid losers. You're going to have winners, you're going to have losers, whether you're right or wrong, whatever your strategy is, no matter what they occur, you want to minimize your losses. All right, guys, thanks for your time today. Once again, remember to check us out at forex-trading-unlocked.com for all of your Forex and crypto trading needs. Don't forget to go to our YouTube channel, Forex Trading Unlocked. Check out our different video playlists. We have lessons. We have different featured channels with different companies that we work with. TFNN, you can find us this Wednesday. You want to see my face live being interviewed on TFNN.com. It will be at 8:40 Central Standard Time. That is 9:40 Central Standard Time or Eastern Standard Time, and we will be on TFNN.com being broadcasted live, streaming live, also to their YouTube channel. So those are two places, and then we will have it on our channel on our playlist later after it is released. You can check out our stuff from eoption.com and other places, all kinds of good stuff. It's stored here for a better record than on Twitch. Twitch seems to have the better stream quality. However, YouTube has all these so you can look at things in the past and review different lessons and what have you if you wish to do so. All right, with that being said, one last little quick thing. We're going to wrap up by reminding you to once again subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked. Check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. Purchase the paperback like our one user did today. Thank you very much. We really appreciate that. And do reach out to me on LinkedIn. Okay? So if you do, we can go over if you have any questions from the book and what have you, or need other resources, I will work with you. I'm always looking to expand my subscriber base and following and interact with you guys, because you're the reason I'm doing this, and together we'll bring you along through this trading environment that we are all trying to navigate, which you know, we'll see how things go. Every week is a new adventure, right? We have some really good volatility coming up. Luckily, we haven't had a dry summer. Sometimes summers are really quiet. So Anyhow, you guys, you take care. You have a good trading day, and we